I'm supposed to talk about putting it all together, and this is a nice little speech to end such a wonderful seminar. I'm real proud of our guys. Think they did a nice job. Who's running the mouse? Todd? Todd, you go to the next slide. One of the big issues with our product is how do we make money with VectorVest? That's the $64 question. And we have, I guess 80 or 100 user groups around the world that are all dedicated to helping people learn how to make money with VectorVest. I had to ask myself that question, and this is my answer. My answer is the first thing you should do is read the VectorVest views. Secondly, you should watch the daily color guard report and the strategy of the week presentations. And thirdly, once you have that information regarding the trend of the market, you should decide when to buy, what to buy, and when to sell. Okay, let's take these things one at a time. Let's get into the VectorVest views. The VectorVest views is designed to keep you abreast of the market. It has several sections to it. The most important, and maybe I shouldn't use that terminology because there's some important sections that aren't listed here, but we have a commentary, valuation, timing, strategies, and climate. And I'll discuss each of these one by one. The commentary, next slide. The commentary is made up of a brief essay on current events, issues, insights, and market activities. Todd, would you go into the views? We write the views every day. From Monday through Thursday, it's all about timing, okay? And a good part of that is dedicated to putting into words how the colors are created and what the market's doing. And then we have a summary, and below that we have a strategy. One of the things that Steve pointed out yesterday was that we list the Derby winners for the one-day winners and the five-day winners of the Derby each day as a means of giving our subscribers an idea of what strategies were hot or are hot. The five-day winners, of course, have been hot for a longer period of time than the one-days. Todd, go into a Friday views. On Friday, we produce an extended newsletter. At the top, of course, we list all our events. Go to the very top. We have phone numbers, email addresses, and whatever. One of the things that any executive should know is you don't want to make it impossible for your customers to get in touch with you. We like to make ourselves available, and we try to answer every call that's made. And we watch that very carefully. But the phone numbers are there. If you want to get a hold of us, just give us a call. And I guess you already know that we're open from Monday to Friday, 24 hours a day, and on Saturday from 9 a.m. to 5 p.m. We went to a round-the-clock operation because we now have customers in Canada, Europe, South Africa, Australia, and Hong Kong. When it's daylight there, it's often dark here. And so we got to be there to help them out too. Go on down, Todd. These are the list of the events that were upcoming events. Just keep scrolling down, Todd. I want to get to the commentary. These are little descriptions of the various events and where they're going to be. And there you go. Last week I wrote a little bit about my anticipation of coming to the Atlanta seminar here. And then go down a little more, Todd. I also wrote a little blurb on the strategy of the week. We always put the blurb for the strategy of the week right below the essay. And that strategy of the week was done by Todd. He did a magnificent job. What Todd did, he gave an introduction to the VectorVest triathlon. And he used the simulator. He ran simulations on all the long strategies over a period of time. And then he picked the best ones, and he used what we call the backtest tool. And I hope you saw the backtest tool in action. It's a magnificent tool. He used the backtest tool to examine how one might manage some of those best strategies with a portfolio manager. Did you also do the Derby section? Yeah, and he took the winners of the backtest tool and he examined them over a 1-month time frame. Was that right? 1-month time frame from the Derby. The Derby has what we call a tote board. It takes the performance of every day of trading and adds it up. So you can see how these guys that did best in the simulator quick sims did the best in the back test portfolio management tests and see how they handled themselves in the Derby. Then he took the best winners there and he put them into our automated portfolio manager, which looks into the future. Okay? So we don't know how that turned out yet. That's cooking right now. So with this technique, what we're trying to do is to get our customers to become familiar with the tools that we have in VectorVest, and we try to make them as user-friendly as possible. We also get into this whole idea of designing a trading system. And when you design a trading system, you have out-of-data tests and you have in-data tests. All the back testing and everything, is under controlled conditions that you can see what's happening, you can change it. The real test comes when you put it into real time and you just see how it cooks. That's something new, and that's something that's part of VectorVest 7. And so we're giving that an opportunity to work. Now today, I spent most of the day today writing another essay about the VectorVest Triathlon Challenge. And what we're going to do, starting with the release of today's product, we're going to announce that we're opening up a challenge to all subscribers. So we do those kind of things. We make announcements in the essay, and of course, the whole idea is to try to give an indication of what's going on in the market and what's happening. Let's go on down, Todd. The next section is evaluation. We always produce this little table in VectorVest US, and we compare the actual Dow to the VectorVest industrial average, which is the Dow that we calculate the value, and comment on it briefly. The thing that is noticeable is that the VectorVest computation of the Dow has been coming down. If you want to see that, one way to see that, Todd, can you go into watch lists in the program? And click on the Dow there, and click on Industrials, DJ Industrials. Click on that bottom line. That's the average. Now, go ahead and click on that and then get us a graph on that, okay? That average is the end of the day average. We have some of our subscribers are wondering why we don't calculate that average tick by tick. Well, the reason's very simple. We don't know how many watch lists are going to be out there, and we don't know how many stocks are going to be in each watch list. Some guy may have 100 watch lists with 6,000 stocks in each watch list. And we can't afford to buy enough computers and pay for enough bandwidth to do what some people are hoping we might do. So we calculated at the end of the year, and this is what we've always done in the past. Todd, can you put the value on there? Give us about a 3-year graph or a 5-year graph or something. You see it goes up and down fairly well with the actual Dow. But if you look, Todd, can you zoom in on about the last 7, 8 months? 6 months is fine. You can see that that average has been coming down. The reason is that inflation is going up, and we use the longer-term interest rates in calculating the value of the various stocks. It looks like the tremendous difference in valuations is diminishing. Now, Todd, can you get us a graph of the S&P 500? They're pretty well matched right now. And now what's the reason for that? When I spoke yesterday, I talked about this thing called a yield premium. And I also mentioned that I wrote an essay on stock valuation in September of 2010. And what we're seeing here is the result of a modification in our valuation formula. We are now using the interest yield plus the yield premium in the formula. And as a logical result, the average valuation of all the stocks, and we get that from the S&P 500 incidentally, and as a logical result of that, all the stocks in the S&P 500, the average is going to be exactly what it is for the S&P 500. The thing that this does for us, it of course still allows us to identify the undervalued stocks and the overvalued stocks. If you looked at the S&P 500, you'll see there's a tremendous spread between undervalued and overvalued stocks. I made a decision 25, 30 years ago to do what I did, and I felt that this is an improvement that we have instituted in a product, and I thought I'd let you know about it if you didn't pick that up in the essay. Go ahead and close the graph, Todd. Look at the spread in RVs. Click on RV, Todd. You got RVs from 156 and click on it again. All the way down to 0.33. So you still have this tremendous distribution of values with the formula that I showed you yesterday. I really like it, and I think it's going to be a good long-term improvement to our analysis of stocks. So right now, is the market overvalued or undervalued? Let's go back and look at the views, Todd. As of last week, we said the VVIA is 16.3% above the muddy Dow, and it is saying that the Dow is undervalued. If we look at the price of the VectorVest composite, the actual price against the value that we calculate, you can see that the price is slightly above. The price of the composite was $29.48. Our valuation was $27.93. So we say the VVC is now 5.3% below the price of the VVC and is saying that the market is fully valued. Okay? You got to recognize that the Dow has 30 very good stocks in it. The S&P has a broader range of stocks, and of course the composite has all the stocks in a database. Another thing that you should be aware of is that we now have about 800 and some ETFs in the database, and the value for each ETF is set to be equivalent to the price. So that's sort of a moderating effect on the overall valuation. But my point of all this is that I think the period of tremendous undervaluation is behind us. Let's go to the next PowerPoint slide. Go to the next slide. This is a graphic. We've used it for years. We've updated it once a year. I started doing this in 1978, went back all the way to 1970 and back tested that, and all the data. The red line is the VectorVest DJIA, and the blue line is the actual Dow. And you could see for a long time they crossed each other. In late 1999 and early 2000, the VectorVest Dow was well below the actual Dow, suggesting that there is going to be trouble in River City. And the great reduction in interest rates and inflation due to the recession in 2002 and early 3 caused the VectorVest valuations to skyrocket. And Dr. Greenspan, you may recall, kept interest rates extraordinarily low for a long time. I think that had a lot to do with the financial bubble that was created. And the earnings crashed in 2008 and early 2009, and you can see how the valuations have bounced back. But I think I think those days of tremendous undervaluation are over. It doesn't mean that you can't invest in the stock market, because I'll tell you when we get to the market climate what's going on there as a strategic issue. Okay, let's go to the next slide, Todd. Is the market going up or down? Market direction is the single most important thing you have to know. Did anybody hear that yesterday? Okay, let's go into the VectorVest real-time, Todd, homepage. Todd, could you grab a mini graph of the VectorVest composite? There you go. Move that a little higher so everybody can see it. There you go. Look at that. Look at that. Oh, wow. Today seems like a repeat of what we've seen every day this week. The market starts out with a good burst at the open, and this dribbles its gains away. There's always a reason why it goes down during the day. And frankly, I don't like that kind of action. They say that the heavy hitters do their trading towards the end of the day, and it looks like there's something going on. When you see trading in the latter part of the day being down day after day after day, I would say raise your alerts. I mean, be cautious. Now, that's part of it. Go ahead and close it. The other thing you should be aware of is that the primary wave, if you go into that color guard, the primary wave is now down. Make it large, Todd. Show them where that down is. That's the first DN in the first column. The VectorVest MTI is still up, but we have 3 yellow lights, and the primary wave is down. So let's see what the color guard is telling us. It says the color guard is neutral. VectorVest does not advocate buying any stocks at this time. If you see yellow in the color guard and a primary wave is down, that's the kind of message you're going to get. If you see yellow in the color guard and a primary wave is up, you will get a message that says VectorVest advocates caution when buying stocks at this time. And this is exactly what Brian told us yesterday morning. The color guard tells us whether it's okay to buy stocks or not buy stocks. You have to look in the views to see if I'm advocating that you sell stocks, or you got to set your own stops. You should have your own stops in place as your first line of defense. If you want to see the rules for getting those colors, go into views and click on special reports and click on color guard. There are the basic rules. You can scroll down. Keep scrolling, keep scrolling, keep scrolling. Keep scrolling. Keep scrolling. Where is our table? Where is our table? Ah, there's our table. At the top, get 3 green lights and an upside, up, up. This is what the message at the top of that next to the sundial is going to be, okay? And right now we have 3 yellow with a down up. The color guard is neutral. Action is do not buy. Okay? We're trying to make it very, very simple. All right, what else we got to talk about? Strategy. We put strategies into the strategy section on a daily basis and on a weekly basis. You can go to the bottom of that. Is that a Friday? Go ahead to yesterday. What did we say yesterday, Todd? Yesterday was Thursday, right? We talked about the color guard, and here's what he said. Prudent investors may buy stocks long as the market moves higher. Well, we always ask our subscribers if they plan to buy stocks based on that advice, they should look at the futures. Well, this morning the futures were up very nicely. The market opened up very nicely, But we say, generally wait until 10 o'clock to see what's happening. Todd, can you go back to that VVC graphic? What was going on at 10 o'clock in the morning? No, the one that you had on the home page. I love that little graph. The market opened up higher, and from 9:30 to 10, it was going down. Was it a good time to buy stocks today? No. What we want you to do, if you're going to buy stocks, we want you to buy stocks when the market is going up, and we want you to buy stocks that are going up. At the very instant you buy that stock, we'd like to see that stock going up in price, and you'd like to see the market going up. You want to get all the wind to your back that you possibly can. Don't be a hero and say, oh, the market's going up, but this stock is going down, and I'll catch it at a lower price. I listened to Kramer last night. He said, wait for this stock to come down. Well, buddy, it's coming down. Okay? You may get lucky, but you never know. You never know. We like to buy stocks on the way up, okay? If you listen to the Daily Color Guard and watch the Strategy of the Week, you'll get a lot of good information on when to buy and what to buy and when to sell. So today, even though we said, what we said was it's okay to buy stocks long as the market goes up. Well, the market was going down at 10 o'clock this morning. You got to give the market at least a half hour to settle out. Another thing that I like to do, and Todd may have presented it to you, I love to watch the Derby. And I like to look at it. When you open up the Derby, the default is to look at the performance of the portfolios from the open. Okay? And there's a little set of tables there. Can you go into the Derby, Todd? Those tables on the right. Early this morning, you would have seen a great majority of the bullish strategies going up and the bearish strategies going down. And I like to see it from the market's open. Now you can change it to the market's close from the prior day. Okay? And you notice that those bars moved a little bit. And if I see a contradiction between those two, I know the market's unsettled. And you can see from the close, we've got 58% of the bearish strategies made money today and only 37% of the bullish strategies. Go ahead to the tote board, Todd. And are all the strategies in the tote board still long? You sort that by performance. It is sorted already? Bearish search. Go ahead back. The top 5 are still long. That says, is that 5 days? Go to today's trading. Use the split view. Okay, the top 5 performers on a 1 day were all long. Okay, so you still have that conformance. You have long strategies for 1 day performance and long strategies for 5 day performance. So maybe I'm just getting a little antsy. But this is a market where you got to be alert to a turn to the downside. That's what all this information is telling me. Okay, so there's a lot of places you can look, a lot of places you can check. Another thing we want to look at, Todd, would you go to the investment climate, please? It says here in your book, the investment climate. VectorVest would always tell you whether we are in a bull market or a bear market scenario. Back in 2003, we created what we call our truth chart. And in our truth chart, we look at the direction of interest, inflation rates, and earnings. And you have 3 factors that could be up or down, which gives us 8 potential cases. And 2 weeks ago, we said we were in a case 1 bull market scenario. That's in your book here. It's as of 3/18. We were in a case 1 bull market scenario in which earnings and inflation are rising while interest rates are falling. Todd, could you go back to March the 21st, 2003? A little lower, a little lower. Raise the truth chart higher. Pull it down a little bit more, Todd. That's good. There are 8 cases, and case 1, you can see that case 1 at the left, it says that earnings are going up, inflation is going up, interest rates are going down, and in that situation, we expect prices to go up, okay? And in the comments says this is where the bull market begins. And this is a situation that you generally get at the end of a bear market at the beginning of a bull market, because what the folks are looking for are the first early hints of pricing power. Well, prices have been going up, but what's his name, Bernanke, is that his name, the guy who flies the helicopter and throws money out of the helicopter? Bernanke's doing everything he can to keep interest rates down. But what's happening is our measures of inflation, which is the CPI and the commodities index, they're showing that inflation is on the rise. We look at 3 measures of an investment climate. We look at 3 measures of interest rates. We look at the 90-day T-bills, we look at the 10-year T-note, and we look at the long-term AAA corporate bond rate. If we take those together, we would see that they're still in a downtrend, okay? So we have a case 1 situation, which is shameful at this stage of a recovery. I mean, we have the Fed still trying to keep interest rates down. That is something to be concerned about. Greenspan overdid it for years, from 2003 till about 2006 or whenever he was replaced by Bernanke, and Bernanke pretty well kept up Greenspan's procedures. In fact, from what I've read since, Bernanke had a lot to do with influencing what Greenspan did. So Bernanke was a man that had a lot to say about interest rates and control of the Federal Reserve Board while Greenspan was still in charge. The key point here is every case, 1, 2, 3, 4, when earnings are going up, we will be in a bull market situation. If we're in a bull market situation and you see the market starting to come down, don't panic. Let your stops and your exit strategies take control. But don't panic, because the downturn probably isn't going to last that long. In a bull market, the proper strategy is to buy the dips. In other words, let the thing come down, and when you see it start going up, get in there and buy. Okay? We're in a bull market scenario, and we're going to be in a bull market scenario as long as the earnings are in an uptrend. When we're in a bear market scenario, what you do is you watch the market, and if you have a rally, you wait for that rally to peter out, and then you sell at the top of the rally. Now, how do we know whether the earnings are going up or down? Todd, go into the market climbing graph. And let's see, we want to see S&P earnings, and we want to see the S&P VV. Okay, how much time you got on there? Make it a 5-year graph, Todd. Way over to the left. Make it 10-year, Todd. Over on the left, we started doing this in 2003. Over on the left, in the upper portion of the graph, we plot the average forecasted earnings for all the stocks in the S&P 500. And of course, it turned out that we happened to do this right when the market was bottoming out and starting to go up. Well, earnings went up. Earnings went up very, very nicely. And then at the bottom, we have the indicator, which is on a scale of 0 to 2, okay? And if it's above 1, if that's above 1, it means that earnings are going up. And see that dotted line? Oh, you have those. Hey, you know, you guys are pretty good. You switched those lines on me. I don't know what the hell I'm talking about. Put the earnings at the top, Todd, and the other one at the bottom. I'm standing here saying, where's the one? Where's the one? It's up there. It doesn't belong up there. Now we got what I'm used to looking at. Okay, at the upper portion, we have the actual forecasted earnings for the S&P 500. And at the lower, we have the indicator, the trend indicator. And you can see how nice earnings went up from 2003 into 2007. And then they started coming down in 2008. And with our truth chart, when that trend indicator goes below 1, we're going to be in a bear market. So what was happening in 2007 and 2008, we could see this bear market coming like a train coming down the tracks. Okay? And it crossed below 1. I think that's February the 15th, Todd. Can you nail that? You got January the 11th. Keep going to the right. There it is. S&P, right there. Highlight it, Todd. There it is, right there. That's when our market climbing system said we're officially in a bear market. Now, we didn't wait for that to cross, of course, before we took action. The market timing system is your action trigger. This is a strategic trigger. But strategically, what we were trying to advise our subscribers to do is to begin preparing themselves for this bear market. The VectorVest composite actually peaked on July the 13th of 2007. And we began warning our subscribers in the middle of July to start watching out. We wrote an essay called Beware the July High. Anybody remember that? This is what we're going to use. So right now, what you see is the earnings have skyrocketed since the bottom in March 09, and now the trend on earnings seems to be flattening out. See it up there? And the trend indicator is starting its journey down. Now, unless there is a catastrophic drop in earnings, which we don't expect, this is a very slow process, but it will come down, 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 just like that one did. And it'll start going down even if the earnings continue to go higher, because the momentum of the earnings increases will be dissipating. And you know, the math is irrefutable. If you go from $1 a share to $2, you got a 100% gain. If you go from $2 to $3, you got a 50% gain. Okay? And so the higher those earnings go, the percentage gains will keep decreasing, even if the actual earnings themselves go up the same amount. So we're going to watch that very carefully, and we'll report that every week, you know, and what kind of a scenario we have, whether it's bull or bear market. But right now, I'm not concerned about the bull market ending soon. The forecasts for 2011 are pretty good, and they're expecting a terrific first quarter reporting season. But the market is high, so market timing still is king. One last thing, Todd, could you find a section in the views on user groups? We list all the user groups we have. I think that even foreign user groups. In Atlanta, Georgia here, we have Larry Sorensen. He's the user group leader along with Lee Gregory. We mentioned how Lee helped us out 15 years ago getting started with seminars. Hey, Larry, can you stand up? There he is. Let's give Larry a good round of applause. Larry runs what is probably the best user group in the United States. He's been doing it for a long time, I think close to 15 years, and he does a terrific job. We also have another user group leader here from Huntsville, Alabama. Not listed? Oh, you got to get back to modern times, huh? Alabama should be close to the top. There he is. Tom Holmesley. Tom, you still here? There he is. If you're near the Huntsville area, of course, or if you're in Georgia here, join a user group. They're wonderful. You get to share ideas, thoughts, you hear other people's opinions, and I think they're very, very helpful. Go back to the PowerPoint, Todd. Our mission is to provide the best stock market guidance available anywhere at any price, and I hope we're getting better at doing that. And I want to thank you very, very much for attending this seminar. You've been a wonderful group to work with. Thank you very much.